Friends. Gary B in the hot seat. What do you have to predict?
Buy ExxonMobil, Brenda. Here's why. Look, since October 1st, oil is down like 60%, and ExxonMobil stock price is actually up. I mean, if the stock can withstand this, fall off the cliff, drop in oil, my gosh, just think what it's going to do if oil starts heading back up. I think it's up 30% in the next year.
Pat, is this the best oil giant to be buying?
If you want to play rebound on oil, this is about the dumbest way to play it because it's the most defensive oil stock out there. If you really think oil is going to the moon, you want to buy a high-cost producer like an oil sands, say C&Q, Canadian National. This is defensive oil, not aggressive oil.
Well, Matt, oil was up 20% this week.
Exactly. And, I actually agree with Gary. We're back on the same page. I own ExxonMobil, but I think it's a great core holding for the energy sector.
You bullish?
I'm bullish on it. I think Exxon, people want security, they want high quality, and Exxon is a bank that happens to run some oil fields.
All right. Matt McCall, your prediction.
2008 was one of the worst years for the financials we've seen in years. However, some of them held up pretty well. And I think lending picks up again in 2009. The largest lender here in the U.S., JP Chase, JPM, I think is up 50% in 2009. I do own it already, and I think they're going to be the biggest beneficiary of lending and liquidity coming back to the market.
I have a feeling this is going to be a little controversial. Jordan, what do you say?
I'm bearish on JP Morgan. They've still got huge amounts of loans to be written off. They took Washington Mutuals, and a lot of the mortgages within Washington Mutual are about to blow up. Adjustable rates going up that people can't afford. They've got the biggest credit card portfolio. They're going to see lots more losses in credit cards. So credit quality is going down, so is the stock.
Gary B, what's the chart say?
Well, I tell you what, Brenda, I think I picked this stock about 5 times in a way that higher levels all along the way. I'm so tired of getting my head handed to me on this. I think it's still in a downtrend. I think Matt's kind of on the right track. I'd wait a little bit and avoid it for now.
Well, Pat, you've been pretty good on the financials. Do you like JPM?
I do like them a lot. I think that Damon's got a pretty good risk culture there, and he got WAMU for a song, so the loan loss provisions should cover them pretty well.
And in fact, your prediction is in that sector too, huh?
Yeah, sort of a very plain vanilla regional bank, BB&T. This is about as dull a bank as you can get. They've also held up very well through this credit crunch, and it's a very simple reason. They made prudent decisions during the boom times, didn't grow as quick. That means they have capital to lend now during the down times. That means they're taking market share. You've got about a 7% yield and probably 50% upside in the stock over the next 2 to 3 years.
Lots of construction lending, though, right? Pat?
Lots of construction lending, but again, if it hasn't blown up yet, I'm not sure when it's going to. It's all about a good credit culture, and they have one.
Gary B, what do you say?
Well, the smart thing that Pat does, he always has this super long time frame, like 2 years. So I actually like this pick a little bit more than JPM, just because of the time frame.
To most of us, 2 years is nothing in the stock market. But okay, Matt, what do you say about it?
I have to agree. Pat and I are on the same page here, and you're looking for relative strength. Bank stocks that have held up in this downturn, and BB&T has, and I think there's going to be more consolidation in regional banks, and I think they benefit from that.
Jordan, are you a bull or bear? Quickly.
A bear on it. I mean, the stocks went from 40 to 26. I guess that's considered holding up these days, but that's a loss for most real people out there. And they do exactly what you said. They've got a lot more commercial loans that are going to blow up on them this year.
And your prediction?
My prediction is to go against the consumer. And there's the Ultra Bear Consumer Fund, SCC, and they've got all the consumer companies. So this is a way
to... It's like a double down, though. This is correct. Like you're shorting
really
and you're even shorter.
This is a double inverse fund. That's correct. And so when all the retailers we talked about earlier go under, you profit from this kind of thing. So I think you can really do well shorting the consumer.
Matt, what do you think?
I hate this play. If you were here a year ago, you look like a genius, to be honest with you. But no, and plus, you do not play to double leverage long term. They actually get hit with a bit of mathematics that's involved, so I stay far away from it.
More so, a quarter of it is in McDonald's and Walmart, the most defensive consumer plays out there.
I agree. 100%.
He's short a key retailer if you're really that bearish.
You may not bet on consumers, but you can bet on Caboose.